I think my return was about 112, 113%, somewhere around there.
Today's topic is trading zero DTE iron condors on SPX. And we will talk about one particular style of trading that many retail traders have had great success with during the last couple of years. I call the style zero DTE break-even iron condors, but it's also frequently called MEIC, multiple entries iron condors. My guest is a physician and hobby trader from Pennsylvania. Welcome, Nick.
Hey, John, how are you doing?
Just great and great to have you here.
Thank
Uh,
you.
you, ha- you have your own way of trading this strategy, and you call it risk tolerance sequence. And we will get into all the details about how you trade it. But first, you posted your results for 2024, and I was so impressed and a bit jealous as well, because last year you more than doubled your trading account, and most of it is due to your way of trading zero DTE breaking even iron condors. So tell us about the results.
Thank you. I think my return was about 112, 113%, somewhere around there. But like you said, most of it was from zero DTE, SPX, and risk tolerance sequence is how I figured out the specific way I was doing it. Now, it's extremely similar to MEIC in that sense of how you enter, when you exit, but the exact timing of the entries is, I think, where the RTS, as we can refer to that acronym, I think RTS, the exact timing is where the biggest difference is. And to me, it all has to do with how much you have left on the table to lose of your account.
So we will get back into those details, but I thought maybe first we will just maybe explain a bit more about what the general style of zero DT break-even iron condors, because there's some commonalities between the different traders. I think the first is, of course, is trading zero DT iron condors on SPX. The second is to collect the same premium on both sides. And the third is that stop losses are set on each side separately and typically at the total premium of the iron condor or maybe a bit less. That seems to, which means that, if one stop loss is hit, one side hits the stop loss, basically you come out as break even for the iron condor. There are also some differences, isn't there? Particularly on when people enter, how they enter, when they exit, how often they trade, how big premiums they look for, and how they set the stop losses. Would that be an okay summary of what people do?
That I think you explained it perfectly. There's a million ways to skin a cat with the zero DTE SPX iron condors. And for each variable, there's so many ways you can do it. I think there's an art and a science to trading, and the different styles you can do, and each tiny variation I think can lead to millions of different ways to trade it.
And we will get to your way of doing it now, which you had so great results with last year. But Nick, before we do that, tell me about you as an option trader. How long have you been trading, and what is your style, etc.?
So I'm relatively new to options compared to many of the other legends on the various groups. I started trading in general in 2016. I didn't get into options until around 2020. And back then I was on Robinhood, which I don't endorse now, but I've since came to Thinkorswim, and I trade on Thinkorswim Mobile because my day job is a physician. Sometimes the only chance I have to trade is in between patients on a bathroom break. So I guess my particular style was maybe not necessarily what maybe is the best back tested results per se, but it was what worked best for my life and my lifestyle and what was convenient. I've probably tried almost every strategy posted in the Tasty trade group and quantum options in all the various groups. And I try and allocate a small percent to try different strategies. I think if you would look up my name in the different groups, I have definitely blown a few small accounts, and that was due to setting mental stop losses back 3-4 years ago. And I thought I could beat the psychology of it. I couldn't. But I tried to learn from my mistakes, and it wasn't until probably 2022 where I saved up enough for I'd call it a big boy account. I could finally day trade. So I started with 26,000 in that account. That year I made it to 30, and then this past year it blew up. And I think, like I said, much of it was from the RTS, but I think the smaller account you have, I think the more liberties you have to take somewhat more risks and decisions that you wouldn't necessarily do on a 6 or 7 figure account. Yes, I did great this past year, but I don't know if it'll scale as well into the higher numbers. So,
well, we all want to repeat it when it goes well, don't we? But it's up and down. You call your way of trading it risk tolerance sequence, or RTS. What's behind this name?
So I love video games, and like you see my gaming chair. And one of my favorite genres is RTS, real-time strategy. So I don't know how I came to risk tolerance sequence, but I was like, RTS is my favorite gaming genre.
So what would you say is the main goal with this strategy?
It is simply to limit your losses, and it acknowledges that gains will come and profit will come. It's really just to limit your losses and to do so in sequence.
So describe it. What is in your way of trading? What are your rules?
So in general, for entry rules, I don't like trading before any big news events. That includes FOMC. Now I will trade right after Powell speaks or FOMC minutes release at 2 p.m. Eastern. But otherwise, yeah, no trading before big announcements. I wake up, I check the investing calendar for those things, and then plan my trading day around that. So right after the big news event, I'll enter anywhere from 10:30 to 10:30 a.m. EST to 3:30 p.m. I'm targeting a total credit of probably 2.6 to 3.2 total on the Iron Condor. And I aim to make both sides about equal, with the width of the spreads about 25 to 60 wide. Although the width of the spread is not a hard parameter for me.
This means that you are probably hitting around 10 to 15 deltas on the short, I would guess.
So it's funny, I almost never look at the deltas, but if 10 to 15 deltas is what the MEIC or your break even targets, then yes, it's probably around there for the short.
And I understand you have some rules for when you go into the next trade. You start with one trade, but then you have some rules for how you proceed to the next trade. Can you explain those?
So this is what makes a RTS, I think, like what it is. So with the MEIC, you're entering at distinct times, 11:30, 12:30, 1, 2, etc. With the RTS, you enter one trade, say at 10:30, and then you wait until one of a few things happen. So say you enter that Iron Condor at 3 credit total. If the total value of the Iron Condor gets down to less than 1.5, then I'll enter another trade. So that could take a couple hours. That could take an hour and a half, 2, 3 hours. So then I'll enter another Iron Condor. So that's one scenario. Another scenario is, say you enter the first trade and then the put side or the call side gets stopped out. In that case, you still have one side open. in the trade, correct?
Mm,
So you wait for that side to get less than 0.5
mm.
credits value, and then you enter another Iron Condor. The basic idea is to avoid too many double stop losses for the day.
So you basically want to feel safe with the previous trade, or have
That's
taken the risk off, so to
yes,
speak,
that's a
more or
great
less
way.
before you go into a new one.
Yes, that's a great way to put it. So, example, if you have a $30,000 account, if you enter the first trade, you enter the first Iron
Mm,
Condor for $3 credit. So
mm,
that means that the max profit is $3. If neither of the sides stop out, the worst case scenario is a double stop. So that would be a loss of $3. Think about a double stop in that case is 1% of your account, right? Because you
mm,
have a $30,000 account.
mm, mm,
So once you have that double stop out happen, you don't want more than two more double stop outs to happen. So that's how I came up with the RTS structure. So you're pretty much waiting for each Iron Condor, whether it was a single stop or no stop outs yet,
mm,
to become like safer, I
mm,
guess, per
mm.
se.
How many trades would you then have on in a typical day?
So say with the $30,000 account, which is what I started pretty much the year with in 2024, I would put anywhere from 3 to 5 trades on a day, and that
Mm,
was with one contract size. And throughout the year, I think the most I had was 2 double stop outs, still a significant loss, still
mm.
2% or a little less of my account, but thankfully never hit a 3% down day.
That's very interesting. So let's we made a slide where we just, let's say, sum up these rules that you just been through. So let me try to sum it up to see if I understand it. But first, you are of course checking the calendar to see if there are any special events that mean that you should be more careful. You start your first trade around 10:30 or a bit later, depending on the wicks. Usually, you have the rule that you do not want to trade
Yeah.
if the short strikes are less than 15 points from each other. I think we did not mention that.
If I may, I think those previous 2 points, I think they really came into play the past couple months, probably
Mm,
November and December, where right we saw the VIX get very low. What was it,
mm,
11 or 12? And I found the premium was just drying up horribly. So at times where I would enter at 11:30 or 12:30 as my first trade, I, by the time it got till then, it was too late. That there was almost no premium that I was comfortable with entering trades. That's why I started entering a little earlier with a lower VIX. And then to the other point, when it started getting towards 1:30 to 3 p.m., I couldn't find short strikes that were far apart. They were so close. I was like, I'm risking a double stop out if it bangs back and forth. That those 2 points I came up with later on in the year when the VIX just became nearly untradeable to past a certain time for my tolerance.
That was
So
a tricky period. I had the same experience. It was tricky. Hard to get enough premium.
definitely.
Okay, so we target equal credit on the two sides, and you say that you typically try to reach for 2.6 to 3.2, but it will drop at the end of the day, naturally. You are not so concerned about the width of your spreads, but typically they are between 25 and 60. And
Mhm.
then you have this criteria for when you enter a new trade, where you want to see that the total value of the previous one have diminished significantly, or if it has hit the stop loss, at least that the other side has also diminished significantly. And
Right.
you
And I
have this.
think, yeah, sorry to interrupt. I think to add an additional point, if I say my first trade of the day was a double stop out and I find out quickly, I'll just enter another one right away. If I'm not at 3% for the day yet.
Mm,
So,
but 3% of the day is your kind of a max that you
yes.
have set for yourself.
Yes, sir.
And I actually personally go for try to avoid losing more than 1 to 2% is where I have set my own limit.
And I guess, like I was saying before, that may be more of the liberties I feel like taking with a smaller account relatively than some of the legends on the group. So who knows? I may move to 2% when I get bigger, but I
Well,
like 3% now.
and I think this is a bit fascinating with zero DT break-even iron condors or any strategies that we all are different as traders. We have a different personality, but we also have different risk profiles, or different what we are comfortable with in losing, and that means that we choose different styles, and I think that is very good. It's very good, and we can all be successful with our own style. And it's important to be comfortable with a strategy that you actually choose for yourself.
Yes, sir. Definitely.
If I ask you to summarize the risk profile of this strategy, where we say that 1 is very low risk and 10 is very high risk, where would you put your strategy on a scale like that?
I think I would put it around a 5 if I were to personally rate it. I think the way I set up my stop losses is a stop limit. That means the market can skip it and I could have major losses. So ultimately, the max loss is truly the width of my spread if there's some crazy event or a
Mhm.
flash crash. So I think that's what makes it the riskiest. I
Mhm.
think what makes it not as risky is I don't hold overnight risk, which is probably the best thing about zero DT and
Mhm.
what I like about the most. You can sleep at night with that one. Um,
Do you set the stop loss on the spread or on the shorts?
I've played around with both. I think I've finally settled on probably the past 6 months, putting the stop on the spread. And I do a stop limit about 40 cents wide.
Mhm.
And that's caught 99% of any stops. I'm checking my phone probably about every half hour to an hour, and I have alerts straight to my watch. If the market were to move super quick, which I think it skipped my stop once or twice the past year, I was able to get out. And yes, there was slippage, but it
Mhm.
wasn't more than a few $100s. So to me, I'm more comfortable with doing the stop limit on the spread
Mm.
versus a stop market on the spread. And
Mm.
then as far as doing the stop on just the short, for me, it was too much management and too
Mm.
much psychology trying to think about, okay, if I put the stop on the short and then I want to take profit on the long, you start getting into, I was getting greedy and wanted to wait to get more profit. And it was just too much management. Now, that being said, towards the end of the day, I will change
Mm.
the stop on the spread to just the stop on the short so that the liquidity doesn't dry up in the long. But yeah, my stop's on the spread, and I feel that having a stop on the
Mm.
spread also buffers. If there's a quick move, at least that long may buffer getting stopped out and
Mm.
maybe save one or two stop outs.
So, what are your plans now for 2025? Will you continue to trade the strategy in this way, or are you making some adjustment to how you trade?
I'm always learning from, for example, all the good interviewees you've had, all the articles you posted, all the legends on the group. I can name names, Tammy and everyone. Y'all are just so many intelligent people to learn from. So I will tinker here and there, but I think I'm going to stay with the RTS style for the most part. I would like to look more into the automated side of things because I think that would draw down a lot of the work involved with entering spreads and exiting and all that. But I don't think at this point, I don't think my account size would allow for the proper allocation to truly give that a
Mm.
good test. So yeah, I tend to just keep going on, and my goal is to get to a six-figure account. So hopefully, I'll be able. We'll see.
If you are to sum up, this strategy and how you trade it, how would you sum it up, and who is it suitable for the way you are doing it?
To sum it up, it is to focus on not how much you can gain from trading. It's to focus on how much you can lose. And I think it is best. I think it's best suited for someone who doesn't want to enter 6 times a day, doesn't want to enter 8 times a day, wants to enter a trade based on how much risk they have left to take for the day. And just to acknowledge that there's always money to be made. There's always a new day. But for today, you need to limit how much you lose. I just posted an example of a 2 double stop out day a few days ago, and I wanted to post it to show, hey, every strategy has losses. Even if at the end of the year you make a good return, you're going to have some loss days. Focus on those losses and minimizing them. The gains will come. That's what I think. And to me, it's been the most convenient strategy I've probably ever done.
And I think you are very right in the best loser is in the end the biggest winner.
Yes,
I think
exactly.
it is. We need to focus on the losses, and reducing losses is as crucial as maximizing winners.
Right. I think so. I think as an added point too, to compare RTS to break even to MEIC to any other zero DTE break even type strategy with SPX, you could have a difference of a millisecond or a couple seconds of how I enter versus you enter. And I think it could be a massive difference in return. I saw days where I would have full wins, and then some other members of the group would have a double stop or 2 double stops. And then I'd have days where I'd have a double stop and they'd have full wins. It is so stylized. It could have been luck of the draw for me for 24, but I hope I can continue it.
Thank you very much for joining for this interview, Nick. And I just want to also end with, if those watching if you're curious about learning more about these type of strategies, we have mentioned there are 2 great Facebook groups. One is the Tasty Trade Options, and the other is Quantum Options. And especially the last one is where you have many traders who are doing this strategy. And we do also have another video, an interview with Icelandic trader David Berensen, that will pop up on the screen here that you can watch if you want to learn more about zero DTE break-even iron condors.